Hi guys, welcome back. So previously we have discussed the order blocks, and the order blocks has been an exciting journey for me personally, and since I knew order blocks, it has been quite an amazing experience. So let me just clear up the charts for our session today. So I'll be continuing on order blocks, checking more examples on the order blocks to clarify some of the things on the previous session, what I have mentioned. Yeah. So first of all, when we're looking at the order blocks, we need to understand what's happening on a higher time frame. So we go to a higher time frame, for example, gold. We check the monthly. So what is the price doing on a monthly? So over here, we need to understand how to identify those order blocks on a monthly charts. So if we are bullish, we need to have an order block. Okay, an order block. Let's say, for example, over here. 1 second. Let's say we have one of this, and we clone this one. Just need to zoom in. Okay. So let's say, for example, we have two bullish candles. Okay, two bullish candles. These two bullish candles can act as an order block. So the reason is that I forgot to mention is that when we have two bullish, a bullish order block in our perception, we need to have at least one down close candle, and this down close candle has to be followed by a long candle if our bias is, of course, bullish. So if our bullish bias is perceived and traded for, we need to see that this candle is a down close candle. So the candle before a bullish candle, all right, is a down close candle, which is a red candle or a selling candle or a bearish candle. All right, so once we have that in check, let me just make the line thicker like that and make it a bit black. Yeah, like that, so you can see it. So when price pierces through this bearish candle or down close candle, pierces through the high of it instead of the low. Okay, when it pierces through the high of it, like rapidly, and just keeps moving high, we're gonna accept that this down close candle high is a really good entry. All right, this is in theory only, that this is a really good entry for a long trade. Okay, and our expected stop loss shall be below this candle. All right, this down close candle. So that's our stop loss. So I'm gonna write it down. That's gonna be put in another color. Let's say this green. This is our stop loss. All right, show keyboard. Stop loss. Okay, so this is our stop loss and this is our entry. Okay, so our entry is here, and then what price will do is that it will usually try to go up further. Okay, try to go up further, and you need to be careful. Okay, if there is a bullish order block before, follow the order block that has been done previously and following the bias of a bullish. So we need to wait until price, until price will go and trade down to our bullish order block. Okay, it should trade up to the high of this candle, at least up to the high of this candle. Okay, sometimes it may trade through the wicks, but we need to be careful that it trades through this high. Okay, another factor is that the high of this candle, since it is a down candle, can also be treated as an entry point. Okay, it can also be treated as an entry point that price will come back to it, and then price will rally from there. Okay, when price drops, it could, when this one drops like that, touches that entry block, price can rally. Okay, so in this case, where would our entry would be and a stop loss is that I'll put a safe stop loss here below this candle, not the second candle, no, below this candle here. That's where I would put my stop loss. If I see the price would be intending to trade lower, then I would take the entry of this high candle and the stop loss will be below that candle. All right, that's how I would do it. And this candle is going to be bullish and it will continue even higher and higher. Okay, it's continue even higher and higher and trades high. So how would the trade be? When would I exit? When would I want to exit? So usually when I see this candle here, I measure the bar. Okay, I measure the bar of this candle, and what I would do is that I will take at least 2 times or 3 times of that candle. Okay, so I'm explaining some ICT stuff here, so just wanted to give him some credits on that one. This is a lifesaver actually, because everyone who doesn't have a stop loss, let's say you don't have a stop loss or a market region where to stop, so this is twice the candle. Okay, that's where I would exit. I take partials and I leave some of it, or I take it completely off, or I would go 3x the candle. All right, 3 times the candle. So if I click on this candle here, I would see like 1 box here, 1 box is fitting, so that's where I would exit, maybe 50% of the next candle. All right, so this is how the understanding where the entries at the order blocks is clarified. Okay, so just be careful that if we have 2 down close candles, that this also can be a bullish order block. So this high one can be a bullish order block. If it drives deeper, then I would take the lowest one, the high of the lowest one, and then my stop loss would be below this. We will see examples of this now, so let me just clear out the charts. I just wanted to clarify it. The same thing will happen when the market is bearish, so we will see both examples soon. All right, so let's say we want to identify where would the price want to go down to. Okay, so we identified that there is a range here. Stop losses have been taken out there. All right, I like to use purple for my order blocks and stop losses. Liquidity, I like to use orange, but technically for now let's use purple just to make things clear. So this is a run on liquidity. Okay, so how do we identify those order blocks? First, we need to see a run, a liquidity sweep. So what does the market do is that it runs through a liquidity sweep, wait for it. A liquidity sweep is done. So as soon as the liquidity sweep is done, we start to see some retracements. So how can we identify the order blocks? So over here, there's another liquidity sweep that is happening. All right, another liquidity sweep that happened. So you might say, oh, this may be a bullish order block here, because price just went through it and then pierced through it and it just went back up. Okay, no, I would not choose that for the bearish order block. A bullish order block, because it's still taking liquidity sweeps. So once it takes the liquidity sweeps, I identify this liquidity sweep and I run that line through. Okay, is there any other liquidity sweep equal lows that it is making down here? I cannot see any equal lows. Okay, so that's good. So now I go to identify the markets. So I see here a run on the liquidity sweep that is here. There's a liquidity sweep done, market starts to go in a range, and then suddenly I see a huge market push up higher. So let's say I have only this market here. Okay, the market is stopped here, and I want you to narrow down your vision up to this liquidity sweep. Okay, what happened with this liquidity sweep? And then it went back up. So the market, as it's going down, it's making a huge down close candles. So those huge down close candles are quite important. As I explained, after every down close candle, and if you're expecting the market to go bullish, usually after stop runs, the market tends to go on a bull run. Okay, it reverses. So over here, this down close candle high, if I mark it and extend that line, I will see that it's quite important when we are checking the entry of the order block. So this down close candle on itself is a bullish order block. So price goes up, pierces, so it has to pierce this down close candle. It pierces through it very aggressively on the next upcoming months, trades very aggressively through it, keeps going up high, keeps going up high. It takes up some liquidity over there, and then now it goes down. So do we want to be trading at this point exactly? No, you do not trade immediately afterwards. Okay, you do not trade immediately afterwards. Okay, I repeat, you do not trade immediately when the price is piercing through it. You have to wait until the price retraces back to it. Okay, gives you some confirmation that it's not going even further down. Okay, so here's your confirmation, another down close candle there. Okay, we keep our attention to it, another down close candle there. Okay, and then price pierces through it immediately, jumps through it. So another one here, down there, the price immediately jumps through it. Okay, so I don't want to refer to the one at the bottom, I want to refer to the one at the top, the combination of the top. So if I see this one here, okay, this one there, here, you can see it. So this down close candle failed because of this up close candle, the bullish candle did not fulfill its duty to close the up higher, so we take it into consideration all the way down here. So this is the high of this bullish order block. Okay, we take it, consider it. This is for later. Okay, now let's go back at the bottom. So this bullish candle gets traded through, I remove it. I don't consider it anymore. I want to consider the one on the left side. So the one on the left side, does it trade through it? Okay, does it trade through it? No, it keeps going up higher. So what did I say about the bullish order block? Where do we want to exit? We take most of our trades, okay, we count this, okay, and we take 2 to 3 times our trade. So if 2 to 3 times our trade is taken, you can see that our exits has already been fulfilled up in this region. Okay, it has already been fulfilled up at this region. Okay, so once the price traded through at the bottom here, we enter a trade, okay, and we exit at the top here. We exit at the top here, 2 to 3 times this candle size. Okay, so we take partials. If price turns to go back to that entry point, we can add more trades here. Okay, we can add more trades, whatever trade that we have taken out there. If our bias is strongly bullish, then we keep continuing to add trades at the bottom here. Okay, we add the trades that we have closed up here, which is profit, which is good, just to make you feel good psychologically. It will make you feel amazing that you have taken profit already in the market, and you will not feel bad that the market has dropped back to your entry. Okay, so whatever remaining trades that you have, you can add more to it to enter as per the initial value that you have had here. The same positions you could have here and exited partially there, you can have entry again, the same ones that you have closed, you can add them here again. And now you enter into another bullish trend, and this bullish trend, you can see that we have a respected order block there. It goes back, trades through it. But do you think that the market will not respect it? No, it will. We always need to refer to it. So what the market is doing is that this stop run, okay, will act as a support here when it is going to be very, very extremely bullish action. So it will use that support of these stop runs or liquidity. It will use it back here as a support. So we've seen that here as well. It's using a support and pushes up higher, and then that's where we close our trades, pushes back down through it again, taken to the order block down there, and then it keeps pushing rally higher and then stops down. Okay, so basically whenever we have those runs, okay, over liquidity or equal highs or equal lows, price tends to use them like this 2 candles here. Okay, these 2 candles here and this equal highs here. Look how the market uses it. It uses it as support. So now it keeps going back higher and higher and higher. Yeah. So let's go move on to the next charting here. Okay, let's identify where we are in the current dates. Okay, let's go to the live data. So currently the price is only going up higher and higher and higher. The reason is that there's Orderblocks here. You see, this last down close candle here acted like a support. Okay, and where do we see this liquidity? It's coming from there. Yep. So you see how the price treats it as a support. It immediately rejects through it. Okay, so let's say that this is where we do not want to trade. Let's say this is an order block, okay, and we're not sure from it. Price could actually give you another chance. So let's see here, when the market drops again, could give you this order block as well. See this down close candle immediately followed by this up close candle, immediately pierced through it. So this validates this order block. So as soon as this validates it and goes up higher, the candle after it pierces through that order block slightly to get some orders and then goes back up. And then the next candle, it almost touches the high of this candle and then moves back up. It closes higher. You see, the body of the candle is not actually closing below at the 50%. Okay, if it reaches to the 50% of this order block and it's at a close, I'd usually highly prefer not to see that happen, because I would consider it as a failed order block. Okay, I don't want to see it going below the 50%, because there's a very high probability that the price would just go downwards and take out that order block again. Okay, you will see that happen multiple times in the lower time frame. So now on the higher time frame, it's quite respectable of the bullish trend. All right, so price, whenever it's have a down close candle followed by an up close candle, a bullish candle, that's when we can get a confirmation on this down close candle that this one is the bullish order block. Okay, we take the high of it and we extend that line, and we see how the price trades through it and then rejects to go past it. Okay, it keeps rejecting it. So there's a lot of orders filled here in order to reject the price to keep going up higher and higher. And then again it happens over here, drops back to it. If I zoom in, okay, if I zoom in closer to it, price rejects almost at the high of it. Okay, almost at the high of it, it rejects and then sends the price higher, and then it comes back down. Okay, it comes back down, pierces through the order block again. Okay, and what happens is that this is a down close candle. Okay, this is another down close candle. What do we expect if we have a down close candle? An immediate pierce through. Okay, an immediate piercing action. Okay, so this bullish candle, this whole thing happened because whenever we had this downtrend candle, okay, a down close candle, a bearish candle, closed right through, like it pierces right through the order block, and then it closes. The next candle immediately rejects everything that happened here. Orders are being filled, and heavily orders are being filled. Bullish trend is confirmed. We can see this huge candle, and what we do is that we take this candle, okay, measure it, take 2 to 3 times of that candle. 1 second. So 2 to 3 times of that candle. This is twice, this is 3 times. So the high of this candle, we can close our trade at it. Okay, so we can close our trade at the high of this candle and then be satisfied with it. So this high is already 2077 up to 2400. So that's quite insane profits if you're a swing trader looking at the monthly charts. So let's go see this order block actually. Let's go see it formulate. Let's stop it here, put the line there. Let's see it formulate on a weekly. Yeah, on a weekly chart. So let's go find that line, how it's happening on the weekly. Okay, so on the weekly charts, we have mentioned that this is the start of our order block. Yeah, so whenever we're moving from the higher time frame to the lower time frame, we only keep refining our order blocks. Okay, we keep refining our order blocks. On a monthly, we would see a huge candles, huge movements, but only very minimal order blocks are formed. But whenever we step into the lower time frames and go deeper and deeper, we are only refining our orders. Okay, so we see that the chart here, we already confirmed that there's a run on the stop. The stop runs that are being on the left side there, it has been taken out. I cannot move all the way to the left because it will stop showing me the charts and so on. So we keep seeing these two order blocks. There's a stop run here. Okay, I don't want to see any stop runs like that happen whenever we have an order block. It usually tends to signify that there's still a liquidity sweep that could happen. Okay, I usually don't like seeing it, especially when it's happening like that. I get very suspicious that it could go run lower, but since there's a multiple series of order blocks that have been formulated, and this has been a really quite significant high that has been made, piercing through these stops, almost piercing through them, and it goes back to the order block. So I can still see there's a bias to go long. Okay, but I'm aware that whenever this price action is made, I prefer it not to go below these stops and just continue up higher. However, for these ones, since it's already taken up these equal lows that are acting as a liquidity sweep run, so whenever it happened, then I changed my order blocks. I can change them. So let me remove that. I'll refine my order block all the way to this point, this high. Okay, so what happens is that there's a down close candle. This down close candle, we have two of them. Okay, right after each other. So as soon as that happened, what I did is that I mark the highest candle. Okay, if it continues to pierce through it, then I will take this candle here. Okay, however, there are cases where you have three down close candles all simultaneously at the same time. So what I usually like to do is that I'll take those three candles, I count them, and I see, does it pass through the 50% of those three candles? If it passes through them, does it close below them? And if it closes below them, does it have an opportunity to close even lower? Okay, what about the next candle? Is it closing even lower, even lower, lower? So I wait to see if there's another order block that could perform after that down close. So I like to see an order block a bit higher, because I don't trust the move whenever it closes below this 50%. I think that it could go even lower because I've seen it happen multiple times. That's why you'll get hesitant to enter those trades. So whenever I see these two candles like that, I like to draw it because it's significant in price. It's in a weekly. So I take those two candles together and I take it like that. So my first order block entry would be there at the high. My second order block entry could be there. Okay, if the price only wicks through it. Okay, if the price only wicks through it, that could be an order block entry as well. Okay, if the price wicks through that 50%. All right, and my stop loss would be below this candle, low here. And if I enter there, my stop loss would be there, the bottom of this candle. Yeah, so it's quite an extensive way to find an exact stop loss, but you need to manage your entries properly in order to have the best stop loss possible. So usually if you put it a few steps below, like that, below the 50% line, that could be a really good stop loss. And later on, if the price moves a bit higher, you can adjust your stop loss just within that range of the 50%. Yeah, because price usually tends not to go through it after it confirms this bullish order block trend and keeps going higher. It usually doesn't tend to go there. So after you get a huge profit on it, you may move your stop loss a bit higher. Yeah, after you gain profits, so you may move your stop loss higher. After this trade is done, I calculate this order block, I take that price and I extend it twice or three times. Okay, So that's how much is 3 times of this block. It's almost 2.5, so it's an acceptable range, but if I continue it, you can see it's going to the wick as well. So that's how I calculate my order blocks exits and entries, when to take out trades, when to take them in. And if I go even deeper into the session, I can show you that this part here is also an order block. So this one here is also an order block. So if I use this candle there, that's my order block as well, a refined order block. So this order block is a continuation of this previous order block, and it just keeps going higher and higher. So I take this trade, price pierces through it, and then this candle trades back through that order block, okay, takes up the orders and immediately goes back higher, okay. So this could be the one that we need to trade. It doesn't have to take all those up close candles all the way up there. So it could be this candle, the next candle, or it could be the candle that comes all the way back down and then trades through it. Yeah, it doesn't always have to be perfect. It's just that the execution has to be in the right terms. So if price goes up higher and then turns back into your order block, me personally, I would add more orders, I would add more contracts to it, and I would trade it as per the first initial idea. So I'll take twice or 3 times that order block candle body. I'll just extend it up higher and take that profit there, partial profits, or completely end the order. Yeah, completely end the trade, I mean. Same thing here. I would take this as my trade idea, pierces through it, goes back to the order block, and then I take trade 3 times. Yeah, 3x that's trade over there of the body of the candle all the way to the lowest formulated price of that candle. I take 3 times of that, and then I exit the trade. That's it. That's how I deal with my trades in order blocks. Okay, and we go daily, even further daily, to this action here. We can see it even more refined. So let's see. Probably I added too much data to that. Order blocks. That's why it's lagging on that one. 1 second, let me refresh. Yeah, there we go. Monday. Okay. Let's see, this is the second line. Let's delete this line before. Yep, delete it. And let's delete this line as well. Okay, let's see this order block here. So the down close candle is this one. This exact one that we are trading. This exact one here. So that's a down close candle that we were looking at in the weekly. So we can refine it furthermore when we are looking at the price at this level. So you can see there are multiple down close candles. Price usually takes up the 50% of these down close candles total. So if I go there, usually this whole thing set up, I don't like it when I see it on the daily. It tends to be more confusing for everyone who's new to the trading. So I'll take the body of that one to the low of that one. Okay, so this is where I define my order block. So the price pierces through it, and I can assume that any of them could be the order blocks. I usually like to take this one, I expand it further. This is an order block as well. You can take this one as an order block as well. This previous candle here pierces through it, continues back up higher. Yeah, and then we see this candle there. This is an order block as well, so we remove this one. This is an order block as well. Price trades through it, but it doesn't pierce to the low. Okay, the low of it. So we take this as an order block, refine that price. Okay, make it going higher. Okay, so since price pierced through it, this is an order block as well after this order block here. and then we can see that the price goes to that body but doesn't go all the way to our stop loss. Keeps taking orders, and then suddenly it explodes. Where would we target? This is our first target. These highs, equal highs over here, relatively equal highs, and then we trade through it all the way up there. As you can see, this is our targeted highs. This is our targeted high as well. And that's where we'd be exiting. So let's say you have these three highs that are marked. Take partials at this first one, take partials at the second one, take partials and end the trade at the third one as well. So that's how you would consume the order blocks. So the higher the time frame you are, the more clear the order block is, and the lower the time frame you go, the more jagged it becomes, and you have to understand it on a higher time frame first, because sometimes the order block may not be that clear on the lower time frames, and it could give you a wrong understanding sometimes. That's why I love going to the higher time frame and then moving back down to the lower time frame, just to get the refinements of the entry and just to define that stop loss mark. Because of course, if you have a huge boatload of money, you would have wider stop loss. But if you are like a trader, day trader, who's trading the charts daily and getting out in and out in the same day, you will get to see the price in a normal action. So for example here, let's see the hourly charts here. Am I in the electronic? Okay. So over here in the 1 hour charts, what I can see is that what the price did. This is what I can see. There's a run of liquidity there. Okay. There's a run liquidity sweep there. So price pierced through it. Now price went downwards. Okay, it gives me this short-term liquidity. It did go up through it. Okay, now it's piercing back down. So what I can see is that the price is going back to this order block. Okay, there's an order block there. Yeah, that's also an order block. If I go into 2 hours, I can see that order block being refined. Okay, the order block is down there. Okay, on a higher time frame. And then if I go to the 4 hours, I can see that this is the order block. Okay, so that's how the price did. The price did go pierce through it. Okay, but did it pierce through 50% of it? No, it did not pierce the 50%. This is a live data, so I'm expecting gold to rally up higher. So on the 4 hours, I'm expecting gold to rally higher this week. Okay, so when the price rallies up higher, it's already entered the order block zone. So over here, it's already prepared. So I'm expecting to have a gap higher. I'm expecting, okay, this is my expectation. It doesn't have to be accurate. It doesn't have to be 100% right. I'm expecting the price to gap higher because it has entered on a huge orders before the close. And I'm expecting it to go even higher, and perhaps on the daily chart where I have marked it, we have a gap. So I think it's trying to fill that volume imbalance and then starts to move downwards or upwards again. I think that's how I validated this move upwards. There's an order block there. It could pierce up higher. Alright guys, so this is how the order block is. So just make sure that whenever you are bullish, you need to have a down close candle, and the bullish candle must pierce through that down close candle in order to confirm the order block. Same thing goes for the bearish order block. So for example, this one here, we have a bearish order block. So let's see it. So the bearish order block, we need to have an up close candle, okay, a bullish candle there. So this bullish candle is acting like an order block. If we extend it in time, we're going to see that this order block is being filled. So we have two of them. Actually, we need to consider this bottom one as well. We don't consider this consolidation. Okay, let's consider these two movements higher. Price moves back to it. Okay, trades down, goes in a jagged way, trades through it. There's an order block there, and we can see a very tiny fair value gap there between that price. It doesn't move through it. That is fine. I was hoping that it could close that fair value gap and then drag down even further. But this is the understanding of a bearish order block. So as you can see, the price pierces through it, okay? On the second candle, second bearish candle, price pierces through that order block, and then it confirms that we are in a bearish trend, and it keeps moving down and down and down. But does price trade back through it? Not yet. It keeps going down, making some order blocks. We have a bullish order block here, pierce through it, sends the price higher, all the way to that bearish order block. So the order blocks, you can understand them as price points, okay? Price points in time that they will come to formulate or eventually fill in the orders, or take out liquidity runs, or take out liquidity sweeps for future trades. So you can anticipate where the market is going through the order blocks, and how the market is going to react to those order blocks. For example, we see this order block here, the bullish candle, piercing through it is another down close candle, and you can see here how the price reacts to it. Yeah, so this bullish candle, price rejects through it, immediately drops down and goes back upwards. There's this bullish order block, bullish candle, and then immediately a down close candle, confirming this downtrend bullish order block. Okay, so price rallies through it, goes to almost 50%, takes out the 50%, but it doesn't close above the 50%, and then we see a move downwards. So when a move is moving downwards, we see a huge gap, which is what I'm expecting to happen in the new weekly opening gap, a gap higher. Okay, closing this gap up here and keeps moving up, absorbing all these order blocks, and eventually taking this high of 3,500, which I'm expecting to happen soon. I don't think this 3,500 has been kept here just to be looked at. I think it's going to take prices even further higher due to the political reasons that are happening. So yeah, thank you guys very much for staying here with me this time. I know I went overboard, explained further stuff, and I try to make the next sessions even smaller, but I just wanted to clarify the order blocks. They are the best things that you can ever learn, and I wish you good trading and have a safe journey. See you.